Hello. All right. For this one, I'm gonna go for a little backtesting session. It is the second of the first, 2025, and I fly to Dubai on the 8th, and I'm leaving my computer and my setup here, so I kind of wanted to just, while I can, do a very long video of just backtesting and going through what I'm looking at in the market and put this video up on YouTube for myself more than anything. Whether I make it public later on or not is what it is. But I just want to go through my strategy, walk through it, just so I can watch this back and understand what I'm on. At the moment, I've been trading this, and we got around a 50% win rate so far. 36 trades, 16 wins, 6 losses, 4 break-even trades. The P&L is up 12,000. Steady, 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 steady. We've had a few losses here, but I thought I might as well do this now so I could like keep the data so we can start again. So roughly was looking at around 112k to start. And yes, G. Right. So what I usually do is split the chart into two. And the right side, typically what I do is I use this for my higher time frames. I get rid of the volume profiles. I don't use that. We change our time to New York because price and the algorithm run off the New York time. So there's no point putting your time in London or Dubai or I don't know, Bangkok, wherever you are, if you're not trading off of the New York time. So when I'm looking at 9 o'clock, I want to see that it's 9 o'clock. We're trading the NASDAQ futures. So on the left hand side, we got the 1 minute, and on the right hand side, we got the hourly. So every candle, of course, is representing that time period. And what I like to do when we're looking at the chart, so I sit down at the chart usually around 9 o'clock in the morning, New York time. And what I like to do is I like to look at what 8 o'clock has done. So on here, I'll mark out the high and the low of 8 o'clock. I just want to see what it's done. Really, on the higher time frame, really we're only looking at, we can really blow it up. We can really kind of like move it to the side and blow it up because we're looking at the high and the low. And that's really all we're looking at. I want to keep my trading very, very simple. Then on the lower time frames, we'll look at the 15-minute and we will look at the first 15 minutes of the 9 o'clock open. So the first 15 minutes. So here, just to mark out my charts, because I don't usually do this, I use color. So and this will be 8, 9, just 15 minutes. Minute high. Yeah, it's probably better in low caps. Anyway, so after I marked out these levels, these are the only levels that I pay attention to. Once I mark out these levels, then I can look at everything else around it. Then everything else can be a little, like I can get more clarity on it. So I can look at the overall high time frame trend, the hourly, the 4 hour, and I can see what the market is doing. So zooming out, I can see that we've had a low, we've rallied up, taken out this high, we filled in this area here of imbalance, broke above it slightly, price respected, broke down, came down to this level here, this order block, had an inversion here, pushed up, broke this high, fair value gap, tapped into it here, broke above this level here. Inversion all the way up here. We zoom in. We broke above this level here. And what did we leave behind? Fair value gap, right here. So this area here is what we've already tapped into. And you can see on the lower time frame how we've tapped into it just there. And then we've run up. So we've broke the first 15-minute high and we've broke the 8 a.m. high right here. So all I'm looking to do now on the 1 minute is I'm looking for any sign of a breakdown in price or some kind of reversal for us to take the 8 a.m. low. If we don't get it, then we don't trade. If the market wants to keep rallying up to take out this high, this buy side liquidity all the way up here, let it. Let it. Watch it. If it keeps building up buying pressure, then I'm just going to watch the market. But for now, this is what I'm looking at. I want to catch just all I need is just a piece. So we're just going to watch the market. It's 9:32 and we'll see what we're going to get. Okay, so immediately you can see there's a breakdown here. And we've got a fair value gap here. So you can see there's an area of imbalance here. And there's lows down here that we could take. There's the 8 a.m. low. There's the fair value gap here that we could get deeper into as well. We've got the low down here that's inside of this fair value gap. So just for the sake of me walking through this the first time, I'm just going to put a limit order here with my stop maybe at the high here. And we're looking for a 1-to-1. We could make this a better trade and maybe make it a 1-to-2, maybe put it above this level here. But let's just say that that's the trade. But most importantly, for my rules, I'm really looking for a 0.5R. That's what I've been doing recently. But for the sake of this trade, we're going to put this in for a 1 limit. Just journaling this trade. And yeah, we'll see if we get tapped in. But we know that that's what we're aiming for and we hit it. So we could have got in on a market execution on this candle here after we've closed below this. Stop could have been above that order block there. That could have been a very good trade. But that's all I'm doing. That's basically the model. That's basically the model. And if you're looking at it on the 1 minute, of course, me watching back on this video, if I'm brushing up or if I'm just like, yeah, cool, I should not forget this. This is just every single day. This is what I'm looking for. Sweep, the reversal, and there's so many different things I could look for. I could look for this inversion. The entry would have been here. I could be looking for change in state of delivery off of this order block. I could be looking for a fair value gap like this. If I go to a 2 minute, I could be entering off of this right here. On a 3 minute, on a 5 minute, for instance. There's nothing there, but you get the drift. This is the same thing on the different time frames. Even if we're looking on the 15 minute, you can see that we hit this fair value gap right here. Right there. Order block. And if we're wicking On the 15-minute, the 5-minute, you can see we've got something there. 6-minute, 7-minute, the 7-minute, we've got this. 8-minute, we've got this. However you want to look at it, price is fractal. We've taken out the high, we've respected the fair value gap, we pushed away from it. On the lower time frame, what are we looking for? We've got this inversion here. This big candle here should let you know everything. All right, sweet. We've taken out this, the objectives hit, and now we're going to go back down to the low. So that's what I'm looking for every single day in the market. And I want to keep going through and do some more examples going forward. So remove everything, go to the next day. Right. Are we on all-time highs? Okay, yeah, we're very high right now. We're very, very high improvement. So again, 8 o'clock, we're looking for the high and the low. On the 15-minute, we're looking for the 9 o'clock open, and we're looking for the high and the low of the first 15 minutes, right? Then go down to the 1 minute, and we're looking for what, like, because right now it's 9:30, so we're looking at what's happened already. We can see that we've built up this range of 8 o'clock. First 15 minutes of the 9 o'clock hour, we broke above the hourly range, broke above the first 15 minutes, we skyrocketed above it. And now we're looking for any PD array to get in on to target this 8 a.m. low or anything else. And again, if we're looking at price on a higher time frame, we're very high in premium. We're very high right now. So we're looking at this here, the fair value gap. And this is below the 8 a.m. low. So for us to tap into this level, even though we've broken above this level here, we're looking for any reason for price to come down into that. So today I'm bearish because I want to see price come down into this level. Just for the fact that I'm bearish doesn't mean I just need to take any old sell. I'm looking for a reason to get in so I can get a piece of price coming down to this. And what reason can that be? Well, we've got big fair value gap here that we will wait for it to be inversed. So if we get a candle closure below here, we can be in. Already, I can see we've got a break down here on this order block. This is a big candle. It's a big candle. Some people that want to take it off the order block, you can get in on and buy the order block. I'm talking just to, if there's anybody else seeing this or I'm showing this to one of my brethren or something, this right here is something that we could pay attention to. The reason why we're paying attention to it is because you see these two up close candles here. Just zoom in. These two up closing candles here, bullish structure. This is a bearish candle. And then we immediately close huge candle closing above this candle. Then we immediately reject after we wick above this candle and get two big candles, and this candle closes below this candle, which makes this an order block because it's sandwiched between two up close candles, and then this big candle just violates it and takes it out right here. So this isn't my entry model typically, but some traders would just take a trade if we get a retest off of that, and then they'll target down here. That's a very good RR. It's nice, it's decent, it's cool. Or we could wait until price closes below this level. That's even more confirmation because we would have inversed this fair value gap, this gap right here between the top of this candle and the bottom of this candle right here, this gap right here. All these other candles, they kind of overlap. They overlap, they overlap, they overlap. But when you see a candle that moves very fast in one direction, there's a gap of this whole candle, the bottom of this price and the top, the bottom of this candle, sorry, and the top of this candle. And every single time, within context, when you draw these areas out, there's usually some sort of consolidation as price reprogramming towards it. This is accumulation. The move to the upside is the manipulation to throw all the traders off before it distributes to the downside. So one PD array that we're looking at is the order block. We're looking at the inversion, and then depending on what the next few candles are, we could get in on a fair value gap. So I'm going to get rid of this. I'm just going to play the candles because it's only 9:30. There you go. So just for an idea, the entry could have been here and we would have been targeting this, but we're just watching price at the moment. We're not getting in on any entry. Okay. All right. There we go. So this is a better entry for me, even though we're kind of low. I'll put my thing down here, and yeah, we could get in here. Let's look on the 2-minute. Well, there you go. I'm okay to miss this trade because I've walked myself through it. So retracing back up into this order block area again. That would have been a loss. Good thing we didn't take it. Okay. So here, we've got a break here again. We're not at the 10 o'clock hour yet. So really, I'm paying attention to price here. Here. I want to see something happen during this time. Okay. All right. See? Same thing right here. Fair value gap. We've got a gap here. Let's see what happens. Okay. Objective here. So you can see on a higher time frame that we're playing around inside of this fair value gap. And we've just hit the objective here. So if we did get in on this candle here, stop above here, we could have got a 1-to-1. If we had our stop above here, of course, we would have got stopped out. We would have got stopped. That's a very bad risk to reward. But that's why we move our stop to break even. So we've just taken out all of these lows down here. We just got a change in state of delivery right here. Got a fair value gap. Could have got in on an entry here to the high. We've got a fair value gap here, so I'd want to take some profits really about here. Here. If you're feeling bullish, maybe up here. But let's just see. Just stopped out. Okay, so you can see the logic is there where, of course, if you have just stopped a little bit lower, you could have got a nice 1-to-2. I wouldn't have wanted to take profits more than the 1-to-1 here because we've got this fair value gap here. And we would have been coming back up to the inversion. But this high would have been perfect. Would have been perfect. You could have put it at the low and you still would have been okay for a 1-to-1 right there. But anyway, no trade today. We're just kind of annotating, but you can kind of see the kind of, you can see what I'm looking for every day in price. It's the same shit. We'll get rid of all the drawings. We'll go to the next day. Still no trades yet, but we could have taken 2 that day. Right. So 8 o'clock. Oh, my bad. I'm going to do this instead. 8 o'clock. Bang. Bang. 15-minute. Looking for the first 15-minute of the hour on here. Bang. Bang. Go down to the 1 minute. All right. Now we're on the 1 minute. Let's look at the higher time frame, see what we got. You can see we're very high in premium. We're coming down. We're kind of swimming around this FEG at the moment. We are inside of an FEG, which is interesting because we've reacted off of this FEG almost perfectly, putting in that low of the 8 o'clock low. So this low down here is the high for another FEG. Below that, we've got another FEG. Big, big, big. So what we can do, because we have broke above this level here, is we could bounce, because this is the last down close candle. We broke above it on a higher time frame, on a 4 hour maybe. You could see this would be the order block. So we could come down and tap it and then go higher. We're already inside of a big 4 hour FEG here anyway. But on a lower time frame, we're inside of this one. So we're looking for any kind of reason for price to want to come back up. If it does, look at this. 18,593. 18. Okay, cool. So we've got equal highs up here. So what I'm aiming for would be up here because these are equal highs. This high right here, and you can see it up here. You can see 18,593.75. This candle 18,593.75. So that these highs here are equal inside of this fair value gap. So we got inducement up here as well. I'm looking for any reason for price to want to go higher so I can get in on a good entry to ride it up to these highs here that were made around 6 o'clock. So London. So it looks like we've broken below Asia. We've broken below London. We're inside of a fair value gap. I'm just trying to frame in my context here. And so now I want those highs. I'm looking for them. Any kind of price that comes down below here, if we take out this low, it's just going to mean that we're playing more into these fair value gaps here. But really, I'm looking for those equal highs up here, where we've got inducement in this fair value gap here, which means after we take these highs, there's a reason for us to run higher into some sort of imbalance, which is this. So this is the inducement of these highs, because if it runs these, we will be automatically running into this gap. So it's like a double confluence there for me. Also, on a higher time frame on the 1 hour, we could see other fair value gaps like these that are like right above on the 1 hour. So this high is also tasty, but I'm not aiming for that high. You know why? Because I just want my piece. I just want these equal highs. Equal highs are my favorite liquidity pool. They're just my favorite. So even if I'm not taking trades when I'm looking at this, I just like running through price and just having a look and seeing what price does every single day, because it helps me understand my bias. It helps me understand my context and the reason for why I'm taking certain trades. So we're looking for price at 10 o'clock to want to drop lower, and we're trying to buy the opening of the lower price that it puts in, the lower wick that it puts in. So let's play price. Okay. We want to see this. Okay. So we're swimming inside of here. We put in a low. We fail to go lower. Put in a lows. This is the lowest low, and then we short lower, and then we have a big change of character here. Let's look at this on other time frames. We've inversed this 2 minute. We've inversed this 3 minute. We've inversed this 4 minute. We've inversed this 5 minute. And we've closed above here. So what I would do, and it is 9:50 as well. So remember, sometimes when we're looking at these things, we're looking at time between here and time between here. We've already put in that high. So yeah, fair enough. I could see if this is all I'm doing, I'm just gonna put my stop in down here. And I'm gonna put my take profit up here. Like I could go down to a smaller time frame and tighten up my stop loss, I guess. This is discretionary. You know what? I'm just gonna put it below this candle's low here. Oh, what is this? It's a 1 to 2.5. Okay. All right. This is fine. We could get another tap down here, but I'm just gonna get in on market order just so I can understand. So I look at the chart like this. I've got the left side, everything's framed. I could mark these out and put 8 a.m. low, 8 a.m. high, 15 minute, 15 minute. But because I've done this so many times and I'm looking for the same thing every time, I could put FEG in this box here. I can annotate it. But if I were to look at this picture, I'll know exactly what I'm looking at. Everything would be annotated here. I would look at this. And if I'm only looking for a 0.5 or a 1R, half of my trade will come off there. And in fact, just to show you guys, or just to, because really, I'll do this. Really those highs. So I'm looking at those highs in here. So if I were to take this trade and I were to be aggressive on this trade, because I can see those big up close candles, I'll go in on a 2% market order. And just take partials at these highs. So I'll play price. You can see price came down and tapped into this fair value gap here, just into the wick of this order block here. You can see there's a small gap right here as well. Price came down, it did, and then gave us that little kick that we wanted. So risking 2%, and we are now up more or less 0.5R, right? I will take this trade and I will take 50% off. I'll move my stop to break even, and I will let the rest of this trade run. We've already hit our first target. We broke these highs. That's all we wanted. We saw this. We thought we was going to get a pullback, and we ran these highs. We ran them, but we've also got equal highs here. So even if we get stopped out, this is still our target. If we go higher and we take some more profits and price comes down again, this is still our target. We can keep trading until these are hit, unless price comes down and invalidates the trade down here. So let's keep playing price. Okay. We got stopped out, which is fine. We risked 2%, so we risked 2 grand, made 1 grand, and got stopped out. So we lost this little pump that we got, but our target is still here. It just put in another high for us. We hit a speed bump here at this order block right there. Or if you're not looking at that order block, you could look at this right here. And that's a little bit more accurate. Play price. We're coming down deeper into this gap here, which is fine. We might take out this low. And also, I want to highlight the fact that when we're trading inside of macros, we always need to pay attention to what time price is moving. Because when we're trading during these times, and for instance, I highlighted the time 9:50 to 10 past 10. This was the macro that I was paying attention to for price to move. We already got this candle at 9:52. The times between 10:02 and 10 past are always the times I found during my backtesting where price moves to take out a liquidity pool. So these highs here is what we was looking at. We came down, we didn't take out this low, and we had a big candle move up. Between 10 past and 10-2 and 10 past, I was on the bullish side, meaning because I had these equal highs I was aiming for. We had this high up here on the 1 hour that we're aiming for. We feel that we've, you know, consolidated inside of this fair value gap here. We had a little push higher. We're coming back down, probably to OTE, to be fair with you. Yep. Around that level. And so during the time of 10-2 to 10 past, I wanted to attack these highs. And I did attack these highs, and I took profits as soon as we hit these highs at a 0.5 R. Because we're not trying to be greedy and hold for the whole thing, because things like this happen. But we still have that same target in mind. So let's just see if that stop to break even partial profit would have saved us. Let's see if we get stopped out. All right. And then again, we don't get stopped out. We've got this inversion fair value gap that we just traded above. So if we wanted to get back in the trade, we could get back in right here. We've taken out this low. We're still aiming for the high. I'll put in another 2% market. Right. And all we're trying to do is be in the swing of the market, be on the right side of the market. So I'm definitely going to take profits as soon as we hit these highs, because there's a big gap here. Could be a BPR to go lower, or we're going to take profits at here, at this high here. But we're going to be very cautious and manage the trade and see what it does. This long wick candle here, along with this inversion, along with closing above this this last uptick candle here before we took that move lower, is the reason why I'm taking this trade, and I'm just following my model. Okay, could be a loss. It's a loss. So that's the loss. Let's keep playing to see how it plays out. That's annoying. If it goes to where it was. So are we targeting the lows? Okay. All right. So this would have been the move. We've got another fair value gap here. Again, let me highlight this just so I can study it. 10-2, 10 past. What happened there? Delete. 10 past. There we go. So what are we attacking here during this? Are we attacking these? Because now, when I see this, it makes me want to enter on a pullback here. Stop at the lows. And again, targeting these equal highs. So I'll get in again. Market. Oh, sorry. Not market. Limit. And we'll see how we go. All right, so we've inversed it. So there's no reason to come back down to my entry, but let's see if we get it anyway. There we go. And that's the trade for the day. You can see we got tapped in by the smallest tick, but we got 2R. So if we look back at this on the day and just look at those positions that we took, 20 seconds. So yeah, we lost 500. Well, we made 500, then we lost 2,000. Then we had a break even trade, and then we made 4,700. So that's a very good trade, and this is the trade that we was hunting for all morning. The framework and the way that we marked out the charts, this is all we were looking for. It's very mechanical, very straightforward. We're not paying attention to any fundamentals. We don't care what's happening in the world or whatever. We're just paying attention to price action. We're just reading the charts, and that coupled with the right times that we anticipate these moves to happen, and seeing if we are on the right side of the market allows us to catch trades like these. And this trade happened at 12:30, way past the time that we were meant to get. So we could have seen this at 11, saw this at about 11, put in our limit and said, you know what, I'm aiming for it. I didn't realize that we was going to dump from here. We were bouncing around this, we inversed this fair value gap here. We tested it, we came down, put in more of a low, but we're still aiming for those equal highs. And we hit them. More than that, we even are on our way to hitting this high here. So we probably will in the next few candles. Yep. And then as soon as we hit, what happens? Not just blind support and resistance, what happens, but within context, what happens after it hits. Hits, breaks. You see? So yeah, that's another one of the trades. Let me go to another one. I'm really happy I'm doing these videos as well, because when I watch these videos back, I'll be able to like really see my thought process, and it helps me when I walk myself through these things. It helps a lot. If you're a trader out there, I recommend it 100%. Okay, my bad. This is here. This is right here. And you can touch up on it on here. Cool. And then on the 15-minute, you're looking at the 9 o'clock. There you go. And then we go down to the 1 minute, and it's the same thing. We're looking at the same thing. And now this is 9:30, because every time I skip to go to a new day, it pulls up at 9:30. Now, and again, I'm just going to walk through all of this so I can explain it. The 9:30 is the time where in New York time is the time where the markets open. It's when the exchange opens, when the bonds open. So when everyone starts clapping their hands and starts going, yeah, the market's open. So there's a lot of price. There's a lot of action that's happening in the market. There's a lot of volume. Sorry. So at 9:30, always anticipate some sort of big move, manipulation. It's just the time of day where a lot of things happen. 9:30. And where we're watching price from 8 o'clock, because that's the time I just like watching price from. I just see it as, okay, the market is starting now. So pretty much from this point onwards is when I'm interested in price. It's just when I'm interested in price. Like, I don't really care about price before 8 o'clock. Oh. So basically from here. And I should just be like, yeah. There you go. So from this point onwards is the time I care about price, right there. Let me leave that on actually. So when I'm looking at price accumulate from 8 o'clock, and then I see this big move at 9:30, I'm always thinking, all right, This move is to throw people off, because when you see this big long wick that's done all of the damage, it means that there was once a big candle that formed down here at 9:30. A lot of people probably chased that candle. But with context, we can see that we are inside of a fair value gap here. And I don't know if this fair value gap will hold, right? But it looks like it's delivering from this fair value gap. It looks like we've taken out all of these lows down here. We've just taken it out. That candle just destroyed it. Anybody that was long from here, that was making a bit of money up here, this candle absolutely destroyed them. Wherever their stop loss was, it just destroyed them. Unless their stop was all the way down here, or they're swing trading it, or it's down here, or it absolutely obliterated them. So all of this liquidity, this is just like the string of this candle, the wick of this candle is like a rubber band. For me, that's the market tipping its hat to me that we're going to do some damage up here at these highs. And what highs in particular? The 15-minute high of 9 o'clock. 9 o'clock started here. 9 o'clock started here. This is the 15-minute high, 15-minute low. We broke the low. We broke the hourly 8 a.m. low, got a big wick. And so now I'm looking for any excuse on a small, this is the 1 minute time frame. I'm looking for any excuse over the short term to attack these highs. To attack these highs, and not only to attack these highs, but to run into what? Well, let's look. We've got some kind of inducement here. Got a fair value gap right above here. On the 1 hour, you can see we've got another gap above here, another gap above here. We've had a big sell-off. So if we get some kind of rejection from here, we've got spaces to run into before we do our next little bit of damage, because we are very, very high in premium right now. We're just trickling up. So we're looking for a reason for price to bounce off these levels and go higher. Now, you could get your fibs on the 1 hour and look, the 0.1 level of this range right here is da 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 da. But you can see where, even if we look at this kind of range right here, we're 50% in that range, right? 61.8 is down here. But then again, we've got another fair value gap here. So if we keep going lower, fair enough. But that is what I'm looking at. I'm bullish today. And that just tells me my bias. I'm just bullish because I want to take out these highs. We've got this little trend line thing going on here that a lot of traders like to trade off. Oh, it taps. We've got resistance here at this trend line. I'm looking to blast through that trend line. I'm looking to take all the liquidity of the traders that have gone short, and I'll put in their stop losses above these areas here. Look at here as well. We got, this is 18, 48550, 18, 48550. So here already we got equal highs as well. So here, equal highs. So if I were to get into a trade on the next few trades, and I'm looking for, right, remember this is 9:30, I'm looking for 9:50 and 10 past. So just pay attention to this time as well as we're looking at price go forward. Okay, let's look at this on the 2 minute. What have we done? I always used to watch these videos and they'll be like, pause the video and have a look. What do you see here? We actually kind of haven't. We kind of, you know what I mean? Okay, the next candle. There we go. That's the one. So we've inversed this candle right here. Just for like argument's sake, I'm going to get in on an entry right here. I'm going to put my stop down here. I'm going to target these equal highs. Right, it's going to be a 1-to-1. In fact, I'm going to just target the bottom of this fair value gap. Right. I'll frame the stop loss in the 1 minute. Now, you could not trade with a stop loss because you've seen how many times I've been wicked out. But the goal is, and the point of this is that I have a target. I have a target in mind. Once I hit here, I don't care what the market does. If I risk 1R, I'm going to make 1R. And the market is tipping its hat to me that it's going to do this. It might not do it now, but I'm looking for something to happen between this time frame. So whether I get into the market now, and I will, because I'm back testing, and I'm just gonna be like, cool, sweet. 2%. And even if we hit this, I'll be out. So let's play the candle. Bang. 1, 2, 3, 4, 5, 6. Okay, we lost. Got a 0.3 in that. But it's okay because we're not into this area yet. So I could have waited, and that could have been a loss that I'm like, oh, I've got to keep this one on the chin. All right, keep a level head. Don't get into the market. Don't go reverse short straight away. We've still got our target in mind. We're still keeping our bias. We play the market. We look at the higher time frames. We stay disciplined. We look here. We look. We can see that there's a fair value gap down here. Are we going to tap into this level? There we go. There we go. We're getting that. We're getting that. Oh my God. We're getting that. Look, we got a singular fair value gap right here on the 3 minute. And then we've got probably on the 1 minute, on the 2 minute, we've got loads of opportunities here. 1, 2, 3. There we go. And that's exactly what happened. We hit it right here after taking out more liquidity. So we took this low, we came up, we took this high. We didn't take these equal highs just yet. We took this high. So really, if we got in on the same trade, but we wasn't greedy, and this is the thing about discretion, right? Because we could have got in right here. We could have put our stop like down here and aimed for this high and got a 1R very comfortably. Yeah, boom, 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 wicked. Soon as we achieved this, the market wanted to do something else and take out this low. So it is what it is. We was looking for a 2R. Our stop loss wasn't that wide, and we got obliterated by this right here. But if you held and you maybe got in here after this candle, you might have wanted this to hit first. We may have saw on ES, we might have had some SMT, which where this level would have hit on ES, but not on NQ, and then seen this big candle. That could have been confirmation. There's so many different ways we could have done it. But the whole point of this is we expected this. We saw this equal high that was going to happen. We followed our rules. We got in where we saw a clear opportunity, and we had confluences for why we could have got in on that trade. Journaling back and understanding why we lost this trade is, okay, we expected this to get taken during this time frame. What happened? The equal highs were taken during this time frame. But before the time frame, we thought that this was the setup that was going to give us this to be taken during this time frame, but it wasn't. We had one more liquidity sweep, and we was part of that liquidity, which is okay. Because if we didn't take that trade and we saw this right after, we would have laughed and said, oh, look, manipulation leg. We put in a low, we came up, it gave us a little chance here. We got caught in this. Boom, big candles, and then the reverse. And this is what we wanted to be involved in, but we missed it for the day. So that's a loss. Delete all the drawings. Go again for the next day. And this is how boring backtesting should be. But how long have I been doing this? Sorry. 50 minutes. I'm going to go in for like another 10 more minutes and then I'm off. But yeah, man. This is just gonna, it just gives so much more clarity. Everything's a lot, not a lot more mechanical, but everything is just more discretionary. It's like, what have we done in the market? We're looking at what we've done. We're looking at how we can get involved. We've got a target in mind. That coupled with risk management, and we're already way ahead of a lot of other traders. People don't have models that are doing this. People don't have certain things that they're looking for. So again, look at this long wick. This is yesterday, right? This is what we got caught in. We tapped into this fair value gap. Oh no, we haven't. We haven't. But this inversion tapped into this fair value gap again, gone higher, broke above here, invert, and then we got a fair value gap right here. So instantly, my eyes are lasered onto this fair value gap. We're inside of a 1 hour fair value gap, right? This up here is a high that I'm targeting, especially because we have nearly hit it, but we dumped. Now we're in a fair value gap. And if we're looking at the retracement on all of this, if we're looking at the retracement of all of this level here, we could come down. I mean, what was the last candle? So we go. There we go. That's a lot better. The retracement is 50 and a 61.8, and we've already hit both of those levels, right? So my bias is bullish. We've broken below the 8 a.m. low, and we broke below the 15-minute low. We've inversed this, and we've just put in this big 930 candle to the downside. Again, big 930 candle to the downside. And we have got this right here as an inversion that I'm looking to break. I'm looking for that to break. And then we've got all of these highs up here that I want us to get involved with. And this is the 8 a.m. high that we haven't taken out this high. So let's just see. We've got a big speed bump here because we've got a fair value gap. But let's watch price and coupled that with the 950 and 1010 macro. Oh, why does it keep doing that? It disappears when I click it. Okay. This is just framing my day now. So let's just watch, see what happens. We broke the highs. Okay, that looks good. All right. You want to know what I'm thinking? I'll tell you what I'm thinking, because it's quite obvious. We broke above this inversion. We would have got stopped out if we had our stop below here. If we waited on the candle closure and got in on this candle, we would have got a very, very good entry with our stop at this low, targeting these highs here. We would have been in for a really good trade, but we missed it. We didn't get in. All right, that's the first trade we could have got in, and I saw it. I did call it. I was saying, yeah, we know we got an inversion here. We got this 930. We closed below it. Second, as soon as I called this, and we're looking at this time frame here, I'm looking to see what happens between this time 930 and 10:2. We pump, come down, pump. Now we're breaking up. For me, if I'm looking at this, say I'm busy, I'm doing something, I'm like, I'm in the gym, I'm whatever, and I come to the chart and I see this and I annotate it out and I look at it. For me, I'll think I missed the trade. Unless it wants to pull back and give me a better entry. We're looking at this big fair value gap. We closed above it. What I could do is, because it's an inversion, right, is what I will do actually is I'll put my entry at that order block. Stop at the low of that inversion. Target the high. More than that high, I'll target this high for a better RR. And yeah, I'll just see what we get with that. Risking 2% of the account. Risking 2% of the account, but if we get a 0.5, which is just basically coming down and then hitting this high again, we will take half off. So let's see. Okay, so we've already done that. Come take half off. Cheeky grand. Move our stop to break even. We don't at this point, after we've got that tap down into this order block, we don't want to see price come back down to this level. We just don't want to see it. If it does and it stops us out, fair enough, but we don't want to see it. Yeah, we don't want to see that. And it would have saved us. So yeah. But within context is that we came back down into this inversion and we rejected off of it. We just wanted to take out this low. Get rid of this. Just wanted to take out that low. But let's see if this trade plays out. Wow. Okay. It didn't work. Today it didn't work. But let's go to the next day and see if this would have hit. No. So we was completely wrong on that day, which is fine. The 8 a.m. had that there. We had the buy side up here. Didn't hit. But we broke above it here. Here was the tippity top. Failed to break it here. Failed to break it here. Then we got a sell-off. And during this time as well, it's like we just got a sell-off, which is fine. Completely fine. We still made money on the day. Remember that. So hold on. One more. Let me see if I can do this in 3 minutes. Right, so 8 o'clock low, 8 o'clock high. Say this is a hasty one. We're just like, oh yeah, let's just quickly trade. Let's see how we go. Low, high. We'll go down to the 1 minute. We're just gonna watch. We broke the hourly high. We broke the 15-minute high. You can see this already. We broke this high here. We failed to hit that low right there. We've inversed this gap right here. We're looking at 9:50 to 10:10 right there. We've got an inversion right there. Let's just see what happens. Yep, taking out the lows. Wow, okay. Okay. Let's see what's happening here. We're looking for the 8 a.m. lows. I think we missed this. Yeah, we missed this trade. But the macro's coming for 10 past. We've actually got a very nice setup for this macro. We've just taken this out. I'm looking at this inversion. All right, it's one of those days. We're just dropping low. The objective for this day was short, but we didn't catch anything. There was nothing to catch apart from this inversion here. So we could have got in right there at 9:30, stop above there, just rid it down to here. But nope, missed it. Nothing was concrete. We could have got in, but it wasn't our model. Nah. You could see what we did. We broke that low. When did we break that low? During what time period? 10:2 to 10 past. That is the way the algorithm runs. Every single day it repeats. It repeats. During these time periods, we're looking for certain characteristics to happen. The objective is achieved between certain times. When we're looking at the graph, right? We're looking at the graph. We're looking at the X and the Y axis. We're looking at the time and we're looking at the price. The time is what we need to pay attention to. 8 o'clock. We're looking at 8 o'clock. right here, this is the frame of the trades. This is the only sort of thing that I should be looking at in the charts. Like it should be just the only flipping thing I should be looking at in the charts. Like that's it. That's all I need. That coupled with my my PD array that I enter off of, and then that is it. I'm telling you, that is it. I'm not gonna go too much. I'm not gonna go on for any longer. I just wanted to have a little backtesting session. Um, from the time I was backtesting, I increased it by 1% anyway. So yeah, man, you have losses, but really and truly, if you just stick to this, and if you maybe start with what a 0.5R, and then you gradually work your way to a 1R, and then you work your way to a 2R, and then you might want to stay at 2R, have equity protection on your account, and just only go for the 2Rs. Same number of contracts that you trade every single day. Say lot size that you trade every single day. Keep it consistent. Look for the same things. Make it boring for yourself. Mark out your charts every single day and just do it like that. There's really very little, like, you just need to just go with the data. You're gonna lose, but you just keep pushing for it. So you know, it could really be, it could be something there in it. It could definitely be something there. But anyway, uh, that's what we're on. That's what we've done. And till next time.